Investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Okay, good morning, folks. This is Larry Pesavento setting in for Johnny Carson, and that's what it feels like trying to follow somebody like Basil Chapman. There's very few people that I hold in higher esteem than him. But I wanted to start out with what I do. You know, I do a lot of trading. I look at 15 and 30-minute charts because I'm pretty much risk averse. And what I'm looking at right now is the euro. Over the last 5 or 6 days. As you can see, we're having a really strong rally this morning, and you'll notice we're setting right at what we call a 382 retracement. Of course, that's one of the first of the Fibonacci numbers that we use. This tells you that right now, right where the euro is trading right now, is where you sell it. And you risk about $200, around 20 pips. You can't risk, I mean, this you're talking about a contract that's well above 100 grand, and you're only risking $200. This is what it's all about, folks. And if you look at it really closely, you can see these A, B, C, D patterns that we look at. There's your C leg right here. There's your D leg right here coming together. Gets above here, 20 pips above this, it's wrong, you move on. And you're only trying to be right about 2 out of 3 times, but your risk reward, you try to make about 3 to 1. Usually you make about a little less than that, maybe 2.3 or 1.8, something like that to 1. But when those statistics add up over a period of time, you're going to be pretty good. Now, I wanted to give you a heads up because we came in this weekend extremely bullish stocks, folks, even though they look so bad Friday. I mean, it was really a beautiful pattern. I'm going to bring up the cash S&P, that's the SPY, so that you can take a look at it. Now, this is all covered in my newsletter, Trade What You See. If you do want a copy of it, if you'll let me know, just send it to larry@tradingtutor.com and I'll send it out to you. But here's where we were at the high way back here in January. And as you can see, these A, B, C, D patterns that Basil looks at the same thing. He just he numbers them a little differently than I do, but they're still swings. And that's really what the market's doing. It's swinging up and down. But I wanted to show you where we are right now. Now, all I have to do is to show you the importance, part of the importance of what we're looking at here, is to draw just a long-term trend line, just a simple trend line that all of us could do and many of us do. You'll see from the high that we made all the way back in January, you can see those highs. You see how symmetrical that parallel channel is? But look where it is right now, folks. It's setting right at the bottom on Friday. It was setting exactly to the tick of the 61% retracement of that past move right here. And it's coming in right here. Now, this market, if it does start to go up, this can act like a fulcrum, pushing this thing up. It doesn't make any difference what the news is. You know, they change the news every 15 minutes anyway. So just pay attention. We got a really, really interesting possibility here. Now, there's one other factor that's out there, and that's in the foreign exchange area, which I follow very, very closely because foreign exchange is money. Now, here is the S&P 500. Give me 1 second. We'll get it up here. This is the cash S&P 500 overlaid over the dollar yen, okay? And as you can see, there's a very high correlation. You can see the gold line is the Japanese yen line. The yellow line happens to be the cash S&P. Let's try that again, Larry. That's correct. That is right. The blue line is the cash S&P. The yellow line is the Japanese yen. And you can see there's a very high correlation coming into what's happening to the Japanese yen now. So what we did was we said, well, if that's the case, then the Japanese yen must be looking very, very interesting from a standpoint of what we would call a Fibonacci retracement or something of that nature. So all we're going to do now is we're going to look at this, and just give me 1 second. I want to get the weekly up so you can see the importance of this, because here's where we are. You'll get up here, and you'll be able to see where we are. We had this big move down from the 151 level, okay? Whole world was bullish up here. Now we come down, we stopped right at a 50% retracement. And for the last 5 weeks, we've come up here as of Friday. We stopped exactly at the 382 retracement of that move. I mean, folks, you're talking about within a 1 or 2 pips. We're down a little bit today, but it's telling you that, yes, maybe this move that we're having here in stocks is related to this, because this is money moving, folks. The Federal Reserve moves in these markets quite a bit, but they don't move the foreign exchange markets that much. They're too big. The euro itself is $1 trillion business every day worldwide. I mean, that's 53% of the dollar index. So that's why you've got to pay, even if you don't trade Forex, you ought to pay some attention to it, because when these things happen, and they do quite a bit, it gives you a rough idea that, yeah, this money is moving. Where is it moving to? This is what we don't know. But we have to take another one into consideration today. This is one of the big ones, folks. This is the Treasury bond market. We want to get up this. We've been focusing on this in my program 24/7. That is on from 1 till 2 each day. Get this up here. You'll be able to see. Look at today's low, folks. You see that little red box in here? That was the buy point, because that was the 61% retracement of the low that we made way back here. Remember when the bottom was falling out of Treasury bonds? You can see this is where the sell point came in with that butterfly pattern way on the left. Comes down, stops right here, has a really strong rally. And now where we are, as of last night, the number was 123.14. The low was 123.14. Now, if it hit the exact low in the S&P 500 and hit the exact low on the bonds, that to me is not by coincidence. And so that's why it looks so very interesting where we are today. Now, if we go below those numbers, it's lights out. But right now, it certainly doesn't look like that's what's going to happen at all. So anyway, let's remind ourselves that these markets, they repeat over and over again with regularity. We already know that from Andrew Lowe's book, The Non-Random Walk Down Wall Street. But within that regularity is a percentage of the time that they can be predicted. And what Dr. Lowe did was he looked at all these different patterns: head and shoulders, 3 drive tops, 3 drive to a bottom, consolidated triangles and things like that. And they categorized those 800,000 charts that they looked at over a 36-year period from 1962 to 1998. And what they did was they said, wow, this really does have some aspect of predictability. So the market isn't definitely chaotic. But within the chaos are these non-random patterns that repeat over and over again. And that's what we do here, is to try to find these patterns. My definition of the type of trading that I do is pattern recognition swing trading. And I try to do it the best possible way that I can. And I try to be right about 2/3 of the time. Sometimes it's a little less, sometimes it's a little better. But it's actually, if you want to know the truth, folks, if I ever do a month where I'm about 80% accurate, and I have those occasionally, but I make less on those months, on months where I'm making maybe 55% of the trades, and sometimes even 45% of the trades. The reason why those 45% of the trades are huge moves. We're going to take a break. 877-927-6648.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. This is Larry Pesavento sitting in for Basil Chapman, and I was talking a little bit about Fibonacci numbers. I posted a chart of the crude oil this morning just a little while ago because we were looking at these numbers in the euro and also with the crude oil, also with the S&P 500, which has really turned bullish now. Once we went above the 40.15 level, that tells us that we're probably going to get up to 40.40 here pretty quick. But the excitement of that I'll take care of in just a second. But I wanted to show you what's happened to the crude oil, since that time that Fibonacci number was hit. It's already moved $1 a barrel, folks. That's $1,000 in a matter of about 5 minutes. That just shows you when these things get hit, these algorithmic traders have their orders setting in there, and boy, they really make it move pretty quickly. And as you can see here, it's had a big move. Now, should we go back below that level here, that it would be extremely bearish, but right now that has a very bullish bias. And if you notice here, the trend in crude oil has been up for the last 4 or 5 days, so it still has a bullish bias looking at that. The way we look at trend, folks, a trend has to be defined on the amount of time that you're looking at. If you're looking at a 15-minute trend, that is different than a trend for a 4-hour chart. If you look at this chart, you can see a 15-minute chart. The trend has been up for a longer period of time, for 2 days, but for the last part of the day, it has been on the downside. So you have to determine what your trend is by looking at the time frame that you're looking at. The trend in crude oil over the last couple of months has been down, all right? And that's really what you have to ask. That is a lecture that I heard from the master of technical analysis, John Murphy, in his technical analysis book of the futures markets. He said that you have to determine trend by the time that you're looking at. So a 5-minute trend is different than a monthly trend, a daily trend. Simple stuff, but people forget that it's a time involved on whether the trend is your friend or not. So that's what you're really looking at. Now, I wanted to cover a few things. I've covered some of the reasons why we think the stock market is going up. One was the fact that it made a perfect 61% retracement. Two, the fact that the downtrend lines lined up perfectly. Okay, the fact number three, that it's perfectly symmetrical. In other words, the moves go up and down in unison, stopping exactly where they should be stopping. Those are very, very important times. The fourth thing is the fact that the Japanese yen, which is, risk on factor, has said that, look, these people are ready to start buying stock, is what it looked like, based on what the dollar yen is doing. And so far, that's been exactly right. And finally, the fifth thing, which is the Treasury bond market went down exactly to the 61% retracement. So just this morning, folks, we've had 61% retracements in the S&P, the crude oil, Treasury bonds, and also in the euro. So all of those, just those four, and also the gold. And watch, since we're talking about this and we're on the air, let's watch gold at 1828. Now that's going to be a magical number, which is a 382. Gold should not get much above 1828 if it's going to be, the bearish to the downside. And where are we sitting right now? I know we came pretty close. I just saw an 1827 print. So we're only $2 away from that number in the thing. Now, the trade that we were looking at in the euro now has a 14 pip loss, folks. So this is one of those kinds that I'm going to bring us up here and let me see it. And this is where I get to put some little egg on your face. But this is where our stop is going to be. You're going to see where we did the trade, and this will be the loser, of course, but that's all right. We have those happen all the time. Get me up here, and you'll see there's where we are. Hold on. Okay, now our stop is just above this. So we're still in the game, but right now it's a little bit squirrely here. Well, not squirrely, you just have a losing position, and you have to follow those because those are the ones that get you in trouble if you don't take care of it. Okay, now we sold it right here, and now we've jumped up here. This amount that we're looking at right here is $150, okay? That's why your stop is right above here, so you're risking around $250 on this trade if it's wrong. So if it gets above that, you're wrong, and right now it certainly looks like it is, and it might still be, but right now you just move on and not to worry about it. Had you done the crude oil trade, which we're a little late getting up there, that would have been, that was a home run. But this one is not so much the same one. Right now it's out $100, so it's not the end of the world with that for sure. Okay, now let's move on here, and I want to cover a couple other things that why the stock market has a potential for being so bullish. Here's where we were Friday, folks. Right on the air when we were in the show on Friday, we were talking about this particular pattern in the S&P. Now remember, I've updated it this morning from where we were. Here's where we were Friday. Right on the close, we were sitting right there on the close is where we were. This is where last night we rallied up here. We backed off for about 2 hours in here, going absolutely nowhere, and then we exploded up to this level here. You can see the ABCD pattern here. We've gone through that substantially, telling us that it wants to go a lot higher. But look at the symmetry that was here on these last few days, folks. You see this on the far left? That's a 3 drive to a bottom pattern. Look at that. 1, 2, 3 drive to a bottom pattern. Well, what happens when this market did another move? Look what it did. 3 drive to a bottom. Drive 1, drive 2, drive 3. You see these little circular things that look like half moons? Those are just showing you the cycles that are there, folks. That's really what it is. And that's why on Friday it looked pretty bullish. And this number right here at 39.4775, the 61% retracement of that low that we looked at. If you remember when we started the show, we started out with the S&P, and I wanted to bring this up to you to show you that low, we'll get it up here so you can see it, was exactly that price, 39.4775. Boy, that's pretty accurate. So that was the reasoning coming in this morning that it looked like it was going to be bullish. Now, how much of a bullishness we're going to get, this might end it in the next 10 minutes. We don't know that, but nobody knows that. The problem is it started in the right direction, so you've got your risk in control, if nothing else. So those are the things that you're paying really close attention to. Now, when we come back to the next part of this area here of Basil show, I want to share with you some charts from Charles Kimball of Kimball Charting. He's he's a younger fellow than me, but he's still an old timer. Anyway, he's got some great charts, and I want to show you the possibilities he's looking at, and they may or may not fit in with what your ideas are in the market, because these are technical things, but I'm just looking at it from a risk control technical standpoint. So when we come back from the break, which will be coming up here relatively shortly, I will get you an idea of what really is happening. And I'm going to start you out just to give you an idea of what these things look like, so you have a pretty good idea. Now, this first one, we're going to talk about this a little bit more than we are right now, but I want to give you an idea of what he's looking at. He's got some pretty graphics that, I'm not capable of doing those, but, he's basically looking at the long-term move in the stock market, and he's showing you where we are right here. Okay, now all I want you to do is to visualize what I'm looking at is this period right here. I'm not concerned too much about this because this is in the past, long time ago. I want to see what my risk is right here. Hey, we'll be right back. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, this is Larry Pesavento setting in for Basil Chapman, and I've updated that E-mini program, thankfully for one of my followers, Miss MC over there in Florida, was kind enough to send us what she was looking at this morning. You can see the wave structure, and now the fact that we've taken out that 40-10 level, 40-15 level, that we're looking at much higher prices most probably today. The key is that it doesn't get below that mid-morning low at 39.92. Should we do that, that would be a reversal, and you wouldn't want to have anything to do with that. That would not be a very good. But let's get back to the Charles Kimball's charting thing that I was talking about before, because this is long-term, but it gives an idea that, yes, maybe with some type of a stretch of some imagination that the Fed is going to do something different. I don't know the fundamentals, folks. I don't care. That's beyond my pay grade. All I know is how much I have to risk when I put something on. I know what he's looking at here is a head and shoulders pattern. If you look at that little pattern right there, that's exactly what he's describing in that particular thing. Now, if that is it, I'm looking at it a little different way, because I'm looking at it as, and I'm going to bring it up to you again here, because to me, this is the real important part of why this market could be rallying. And here it is right here. This is the same one that we posted when we started this show, is the pattern of where we are right now over the last, it's in January to January. That's a whole year. Right here we are in March. So we're out 14 months. And we've had a huge break, but look at the rally. We're making higher bottoms now, folks. This is nothing negative that you're looking at right here. This is you're sitting right here. So who's to say that you can't make a B, C, D in a bear market all the way up to here and still be in a bear market? But that's a 20% move in the S&P, folks. I don't know if it's going to do that or not. I know that it was supposed to start on Friday, and by golly, today is Monday, and it's trying to tell you that, yep, something happened on Friday. Whether it continue or not, don't really know. But all I know is that my risk is, from where we were Friday and where we are now, is you're in a profitable position. There's no way that they could possibly get you in a losing position unless you handled it, terribly. And that's not the way to do things. That's the way it looks like. The buy was early this Sunday night at 39.75 when it opened. I think the low was 39.71, something like that. And now you're 40 handles higher than that, 35 handles higher than that. That's a very, very bullish sign. So that's why we're paying attention to these things, because they're for risk control. Now here's another one from Mr. I'm going to get this up here, and this is I don't understand. He calls it the shoebox indicator, but he has so many followers that people send me these. I don't actually follow his work, but they send them to me because I'm interested in these patterns that we're looking at. Now, you see this pattern where it says risk on and risk off and stuff? This is basically that pattern in the Japanese yen that we were just talking about a little while ago. The Japanese yen's down 40 pips, almost 50 pips from the high last night, and that's telling you, yep, maybe this is why it's working. Now, if this turns around and goes back up, then that would say, oh, something's wrong. So that's what I'm doing, is I'm trying to follow the money. So when I see a chart like this, he calls it the shoebox indicator. Well, I have no idea what that means. I'm not a follower of Charles Kimball, but I do like his charts. He does good work, and I've been following him for quite a while, so I know he does good work. And he's wrong occasionally, just like I am. I'm probably wrong more occasionally than he is, but that's neither here nor there. Now, there's a couple others here that I think that are relatively important, and I want to bring them to your attention because this happens to be one about the NASDAQ, and I just want to get in. The NASDAQ chart looks just like the S&P chart. This one here shows it on a little bit longer time frame, going back a very, very long time. But you can see where we are right now, and he draws these channels. And now you notice this channel that he's drawing in, okay? All he's doing is taking the highs and lows from previous areas and drawing the line in. This line usually is about a 45-degree line. W.D. Gann talked about that. So here you are, you touched it 1, 2, 3 times here, and this is where we've been recently, and there's where we were last Friday, doing the same thing, touching that line. So as long as it can get above there, it's got a chance for a much larger rally. Is it going to rally? So far it is, but this is early in the day and anything could happen. But if you look at those 5 things and add them together, it gave you a bias here. Wow, maybe this market should go higher today and not go lower. And that's the part of the thing that we look at. And I've got one other one that I wanted to bring up to you, and that is this one right here. This is the advanced decline line. Now, this one is a tiny bit late because we've already turned down from that level, but he was looking for a correction to come in, and that correction certainly did come in. That's the one we had coming into Friday. We were down, 5 out of 6 days. So that red line now is we're down in here somewhere, but you'll notice that same pattern, you can see these A, B, C, D patterns everywhere. Look at A, B, C, D, A, B, C, D, A, B, C, D, A, B, C, D. These are the same types of patterns that Basil has. He numbers them a little differently, but that's pretty much it. So this advanced decline line is down a little bit right here. So it's had a really good move. So if the retracement in these last 5 days is probably what happened, because this is a week late. So you got that little retracement here, and now you got the market moving higher. And if it moves much higher, folks, I mean, you could be looking at a market that's going to have one heck of a move, to the upside. So let's remind ourselves that that's pretty much it. So let's see, we've got about looking at that euro trade that we're doing. It has a $100 loss right now. It has not come close to our stop yet. That's pretty much what we're paying attention to with that. The S&P's backed off about 10 points from its high. No big deal. We missed the high in the gold, it looks like, by $1, because we were looking at 1828. It got to 1827, which was the 382 retracement of that move. It might still get there, but we'll have to wait and see if it's going to do that, of course. But that'll be coming at a little bit different time in here. Okay, now I wanted to get back and show you one other chart that I can talk about with a great deal of knowledge, because I've been in this for this many years. I mean, it's hard to believe that I've been in this many years, but I did my first trade in 1959, and we're going to be starting here, going all the way back. I'm not going to go back into the well, we will. We should talk about this because it's all part of what the market is actually doing on a long-term basis. Here's the stock market pretty much the last 100 years. And I won't spend a lot of time with this, but it's important. Here's where we were. You see, this was the big move up. This was the one that, made everybody go, ooh, wow, the world is coming. It's incredible that all these things, that was the top of 1929, folks. Now, believe it or not, in 1929, there were 2,000 automobiles companies in the United States. That comes out of a book called, oh dear, now I'm having a little mind, Almost Everywhere, something like that. It's a great little book about that whole period of the roaring 20s and stuff like that. And you can see the big depression that happened. The market bottomed on July the 5th, as Basil tells me, and that was 1932 when the Dow hit 40. There were 30 stocks in the Dow Jones Industrial Average in 1929. 15 of those went bankrupt, folks. American Telephone went bankrupt twice. 877-927-6648. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. Larry Pesavento setting in for Basil Chapman, and we've had some pretty good movement here in the market early this morning. I wanted to bring the chart up here. This is early morning move. You'll notice we've completed another ABCD pattern right up here at that 40.25 level. Remember, we mentioned if we get above 40.40, that's going to be the real key level to watch, because if we do that, that's a bigger than a 382 retracement from the last low, telling you a lot of strength. But look what's happened here. We've dropped about 30 handles very, very quickly here in the market. That's just nothing more than these algorithmic trading firms out here. Now, should we start getting below 39.92, that's going to be a really interesting spot, because that means the market is breaking. Look how fast it's breaking. That's telling you the first thing that you got to be careful of that. The speed of that break is very, very important. So when we get below 39.92, that's going to tell us that trend maybe has changed, and we're going to be heading down, possibly even for the rest of the day. But all we're doing right now is having a correction. That's all that happens to be. If we get below this level, then that's a different ball game altogether. But that's and remember, I'm doing this on a short-term basis to show you that these patterns work on the long term and the short term. One of the reasons why we came in today so bullish, I gave you those 5 reasons. Whether that's going to be a big move or not, don't really know. It started in the right direction. Whether it's going to end that way or not, I'm not really sure. Now, another chart that was interesting that we've been talking about for quite some time here the last couple of weeks has been this chart that we have on the we get from Bloomberg that shows how the retail traders, the smaller traders, are heavily involved in the stock market. This was from about 10 days ago, but it's still valid because these numbers have continued to rise, even though the market has backed off a little bit. You can see the retail traders have come in here in a very, very large quantity, as they should have, because you can see it's been going straight up. The problem is they've still been in it, and the market's come down now for about 7 or 8 days. So this is going to be an interesting one, because sometimes the retail traders are correct and other times they're not, just like when I trade, just like when Basil trades. Sometimes you're going to win, sometimes you're going to lose. Focus on how much money you're going to lose, folks, not how much money you're going to win. Winners focus on how much can I lose. Losers focus on how much you can win. That's how Las Vegas operates. They got all these slot machines and flashing lights, for whatever it happens to be, a sporting event or a slot machine that's going to pay a giant payout of $12 million, whatever it happens to be. They don't tell you that it's the odds of winning it are probably 1 billion to 1, but that's the nature of what it is. They put those flashing lights up there to bring you in. That's what they do here on Bloomberg and what they do it on CNBC and in the financial press. They say, oh, look at this great opportunity that we have going on. Well, you better be careful what you watch for. That's why my motto is trade what you see, not what you think, because when you can see what's happening, it's a little bit different. If prices are going down, there's more sellers. If prices are going up, there's more buyers. That's all you really have to know. Once you have that figured out, the rest of the part of the puzzle is actually pretty easy. So we know one thing: if we go below Friday's low, that is extremely bearish, folks. I mean, to the point, especially after a rally like we've had here over the past 16 hours since Sunday night. Yep, that would be extremely bearish if it were to do that. Thus far, that has not happened. But that doesn't. The first indication is if we get below 39.90. If we get below 39.90, that would tell him we're trading at 401 right now. So that's not a big deal, is it? Right? So that's not a big deal. All this is a sell-off. It sells off 20. Look, if the market can jump 35 points, it can come back 25 points, right? And that's just because of the algorithmic traders that are out there. And they know these numbers as well as anybody does. So that's the whole thing of, why you're focusing on these things is focus on how much you have to risk when you're doing something. No one can tell you what's going to happen next. I mean, no one. I mean, sure, you might be right for 2 or 3 days, but for consistency over a long period of time, not going to happen. Not going to happen. That's why, as a pattern recognition swing trader, I'm looking at segments. And if this segment tells me, yes, it's got a chance to rally from here, that tells me the odds are in my favor by about maybe, 75%. The odds are in my favor. That means 25% of the time I'm going to be wrong. So that's what I got to focus on. How much is that 25% going to cost me? That's what I was looking at in the euro today. And it was going to cost me over a couple $100. I was wrong. It went to about $190. And right now it's setting at a loss of, let me see. Right now the loss happens to be $110. So if it moves up another 10 pips from here, I'll be gone. Say thank you very much and move on to the next one. However, the Treasury bonds, if you were able to, and believe me, I had an order setting in there at 123.14. I didn't get filled, and I should have put it in at least one tick above it. That was a clerical error on my part, and it rallied all the way up $1,000, folks. The high today in the bonds was 124.17. I'm trying to buy at 123.14, and it got to 14, and I didn't get filled because it was the middle of the night, and I didn't put my order in at 15 or 16 just to make sure I would be filled, and I didn't get filled, so I'm paying the price of not being in it, and so that's okay too, because sometimes you'll miss them, sometimes you'll get them, but over a long period of time, you're going to be better off by just following what your trading strategy is. Because once you have a belief in your trading strategy, the rest of the stuff lines up real easily, folks. I worked with Mark Douglas here in this office here in Tucson, Arizona for 6 years, watching him write the book, The Disciplined Trader was written in '83, but this one was written in 2005. I believe he came out for it, but for the 5 years he was here with me, he wrote that book, and trading in the zone is really what you try to do, is to get in the zone where you're actually looking at something that you can say, yes, I know the probabilities are such that this should happen. And that's what these patterns are, folks. They're probabilities. They are not certainties. They never will be, and they never can be. So let's remind ourselves of that. So that's what we're watching here this morning here at Basil's show. It's a real honor for me to even come in and be able to do this for him, because he is so good at what he does. And I've never seen anybody that can use moving averages and some of the other technical studies that he uses. I'm basically just a pattern recognition, ABCD, more or less a one-trick pony, but he can use moving averages like a magician. And when you listen to him and how he lines it up, and these things are at these points. Not necessarily when the moving average turns up, it's the way it's forming. And he can see that within a pattern concept, and that's why it's so valuable. And he and Steve Rhodes does pretty much the same thing, but he's really good at it. And I don't use any oscillators or moving averages. I just look at the bar charts. Prices are going up, there's more buyers. Prices are going down, there's more sellers. We're going to take a little break, 877-927-6648. We'll be right back.
Are you grinding in the market, but seeing little to no return? Or are you a successful trader, simply looking to make your job a little easier? Learn to take the path of least resistance with David White's powerful trading newsletter. David White is an accomplished trader whose deep understanding of technology and the markets allows him to consistently find and share winning trades. Support and resistance define the ranges in which stocks trade. By understanding these trading ranges, David White is able to find the path of least resistance. David White's trading newsletter, The Path of Least Resistance, is delivered daily before the markets open to make every trading day an easy win. Visit TFNN.com today and subscribe to David White's Ultimate Trading Newsletter for $119 a month. And try all of our newsletters risk-free with our 30-day money-back guarantee. Take the path of least resistance at TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, I'm Larry Pesavento setting in for Basil Chapman. I posted the chart, which I think is the most important chart probably of the week, maybe for the whole year, certainly for the month. But this is where we set. As of Friday, we were setting exactly at that Fibonacci retracement at 39.47 and 75. So what we're looking at is something that makes us think that this could be a major bottom. I tried to iterate the ones that I thought were important. The fact that the Treasury bonds hit the exact 61% retracement, the Japanese yen did the 382 retracement, the S&P did the 61% retracement, the Dow Jones did the 61% retracement, and there was one other one that I can't quite remember, the dollar yen. Well, there was four. I can't remember what the fifth one was, but there were five things to tell us that, yes, this could be the spot where we start to move from. And that's all I'm saying is that this may or may not mean something. But if we get really strong today, folks, and if we close any time this week above 4,100, this is going to tell us that this is really a serious bottom. And this could be just a rally in a bear market. But it's going to be a big one. And look what we've gone so far. We've gone from 47. We rallied 70 handles. Let me see, 50. Yeah, we rallied 70 handles since Friday when it was the Dow down 600 points. You know, we've come back quite a bit. So there's some buying coming in, and we're going to find out whether it's going to be good or not. The fact that the bonds hit that exact number and rallied a full point is it's a big deal. So let's keep our minds at ease. Thanks for listening to me, folks. Stay tuned for Basil next week, and I'll have my show coming up at 1 o'clock. See you later. May God bless.